like this camera. Are we live? Are we live? Are we live? Are we live? Should be live. Little dipsy do this morning. Bam, bam, bam. Interesting move this morning. Oops. Yo. All right, we're back. I was live this morning. What's going on? Let me know if you guys can hear me good in the chat. Gonna get started in like 2 minutes here. We're back live. Gold pushed up from where we were this morning. Was just cracking 400K there. Should have closed. Could have closed. Time is it? 12:30. Yeah, might be a good time to close. Market made the move. Market made maybe not the full, like made a good move. I anticipated something to go, price to go up from there. Good move to secure, decent move. Was cracking 400K moments ago. Trying to break the 400K mark, you know. If I break the 400K, if I can get it up like $1,000 for, you know, and then trying to crack the 400 and then risk from there. If I get it to 401K, realistically, the next trade I take, I'm gonna risk like $1,000, you know, to keep it marginal. Try to look for something maybe that can get a greater risk to reward or a hold. If I can crack 400, get above 400, 401, a little bit of room there in terms of like the number, you know. I want to stay above 400. Like when I get above 400K, I want to stay above 400K. So as I'm getting to that new balance, new number, I don't go too heavy with the risk. Like I want to keep it marginal in the sense of trying to stay above 400K if I can get it above 400K. I took this trade live on stream earlier after I took a loss, right? I took a loss live, I closed it. And then I said, you know, it's not about reacting right away. You know, the market could set up again, or it's not about reacting right away to that loss, like, because everyone was asking me, like, what's gold doing? What do we do? Do we jump into, you know, it's like, I always get those questions when I take a loss. And you don't have to, you know, scatter right away of like jumping in a trade. You lost a trade. You lose a trade. It happened. Not every trade you take is going to win. Strategy is still strategy. You can see 46.75 here. So we came down to that. And when we talk about sessions, timing, this should make sense. If you know my strategies, if you're on the session I did earlier, I took this buy live on the stream earlier. And I was even saying, because I didn't even explain the trade. I took it live, but I was even saying, like, if you know my strategies, you should kind of get an idea of maybe why I was looking for buys. The things that I teach. So it is what it is. It's not all, like I was saying this morning, it's not all, trading is not always like winning every trade, 100% win rate. It's not always pretty. You can lose a trade in the same day. You can take another entry. I waited 2 hours. So I took the loss. And I waited 2 hours till I entered the next entry, which was live on stream, right? We were on for almost 3 hours earlier today. And even there, you had like the 1 hour rejection. This thing might pull back. At this point, it's like a break-even trade. So yeah, if you were on the stream earlier today, you might have seen me take a loss. And I was talking about when you take a loss, you don't have to react right away. In the sense of, okay, you took the loss. Usually when you take a loss, you might want to make it back. You might feel the eagerness to get in a trade. Even if you win a trade, you could win a trade and take a trade 10 minutes later. I like to maybe give some separation between, okay, when I lost and the next trade that I take. When you lose, it's like after you gain experience, you'll have the ability to be like, okay, I lost a trade. Was it a good trade? Should I have took that entry? Could I have waited for a better entry? Or if you stay patient enough, it's like, oh, this is the entry I really want. This, you know, that's where it's like, okay, this is the entry I wanted, the better entry, right? Might just have to secure for this 30-minute flips. See my entries, like I was entering down there. So first trade I took lost. Market came down, bounced, came down, bounced, accumulated more. Started entering. I entered live on stream. And if you've been tuned in, I've been talking a lot about market timing, market sessions. If you've been plugged in the live streams, we've had a good amount of talks about timing, market timing, right? If anybody's been here, what do you notice? I'm gonna let you guys, what do you notice? Type in the chat. What do you notice? Now, I've been teaching this for the last 2 weeks, all right? I'm bringing this up because, again, I've been teaching this for 2 weeks, right? What do you notice here? Nothing random. Again, I was saying this morning, if you know my strategy, you should maybe get an idea of why I was taking this trade, right? What do you notice here? What do you notice? If you've been plugged in the last 2 weeks, right? There it is again. Again, like we've talked about this a lot the last 2 weeks, 3 weeks even. There it is again. We've talked a lot about market timing, right? Market timing, reversals, London session, New York session. Oftentimes, London session. Can trend, breakout, trend into New York session. Breakout, I meant to write breakout. London session can break out. It can have a trend overall, right? It can have a trend. Volume. A momentum. And we talk about strength, weakness, momentum, trend, breakout, strength, weakness. Often in London session. There could be reversals too. It's like if the reversal doesn't work in London or early, you know, okay, maybe New York session, right? I literally showed this today. Look, pay attention to what I did today. Because I took a buy and it didn't work. So when we look at that, we could say, did I get in early? We could say that. We could say I got in early. We could say it was the wrong trade. We could say it was the wrong trade, the trade I didn't want to take. Maybe I got in early. Maybe it was a bad trade. We could say whatever, right? That's not the point. Okay? The point is, there's still going to be trades, right? So, when it comes down to losing a trade, and the market's setting up again, or you see another setup, I used to call this clearing the slate. Right, clearing the slate, okay? What's that? Sometimes you may have to clear the slate. What does that mean? Act as if you were just getting on the charts for the first time. So, did I get in early? Was it a bad trade? Was it the wrong trade? Was there a confirmation there? Right? Because regardless, if I take that same trade every week, every other week, it'll work. There's times it's going to work. There's times it's not going to work. Right? So patience obviously could have played a role in just waiting a bit longer, maybe closer to New York. Right? Now, the market's still set up regardless of that. Regardless of if it was a good trade or if it was a bad trade, early trade, or if it was an amazing trade. What if it was a great trade setup that you're going to take and you're like, oh, this is a great trade. I got to take it. Right? Well, clearing the slate, I came up with this a long time ago. Like years ago. It's as if, imagine you were just jumping on the charts for the first time. And you didn't take a trade. Like, obviously, that might sound weird to say, but there's some psychology that goes into it to keep you sharp, to keep you steady, and not overthinking things. Because let's say you take a buy and market goes down. Now, the market's here, probably at a better zone, probably at a better area. So sometimes it's like you have to think as if you just got on the charts. Like what if you just jumped on the charts after everything just happened? Like you took a trade, you lost, market went down. So you had a sentiment there, you had a bias there, market went down. Now you're here. Clearing the slate is like acting as if, what if I was just jumping on the charts the first time and I didn't take that trade and the market still did what it did, right? Because what if there's times you do that? What if there's times you take a trade and you're like, man, maybe that was the wrong, or maybe it was early, maybe it was a bad trade, maybe it was the wrong trade, a bad trade, or maybe it was a great trade that you really liked, right? Maybe it wasn't the best confirmation, maybe it was early, maybe it was the wrong entry point, maybe the timing was off, right? Sometimes it's like, okay, what if I was just jumping on the charts now, fresh risk, fresh mindset, fresh psychology? What if I just jumped on the charts? How would I be thinking? How would I be acting? How would I be looking at this if I just jumped on the charts? Like, if you look at gold yesterday and today now, I can see yesterday made an extreme bearish movement. So it's like, what if you were buying before that? Like, what if you were buying up here? buying up here. Or maybe you bought what if you were buying on this candle after it dropped thinking, oh, this is going to go up. And then market comes down, and it does this. And then market does this. And you're like on the charts. And it's doing this. It's doing what it's doing. Imagine if you were just jumping on. Imagine if you didn't take the buy up here or a buy up here before that move. But yeah, it happened again. As you can see, if you know what I'm talking about, a lot of you guys should. Right? London session bearish, New York session bullish. Like I said, if you've been on streams, because I've highlighted this on a good amount of streams in the last couple of weeks, showing examples. So, I mean, if you look at yesterday, you might have anticipated this yesterday because it was going down. But then sometimes it's about what price is doing too. Like it's like, okay, price went down. It didn't work at the time. But then like right here you can see like in that window, we do end up reversing in New York session yesterday. Like we dropped down and then 10, 11 o'clock, we got a reversal. Not exactly the same, but similar in the sense of like price dropped, created a confirmation after it dropped, which is this long wick. You have long wick rejection there, and then you have that bullish candlestick. That's like what price is doing. That's the confirmation, like to say, oh, this looks good now. However, you were trading before, like if you were taking buys before that, at a point it's like, okay, this is actually setting up, like something's happening here. Like today, I was taking buys before this setup down here. Came right again to if you look at the whole number strategy, I talk about this stuff a lot. 46.75. Yeah, looks like it might be. Yeah, it's probably like done for now. This candle looks like it's gonna flip. What time is it? 7 minutes left. Next candlestick's probably gonna open, spike up a little bit, and maybe come down. I'm gonna close this because like it looks like it might turn around. Didn't crack the four. I was at 400. I don't know if you guys saw. I was up 2,200 on that trade. Oh well. So missed out a little bit. Would have been above 400k right now if I closed it a little bit earlier. But regardless, got the move there. Built the balance up a bit. Made that L I took back. Almost. Could have closed that trade earlier. It was up like 2,400 at one point. I took that L earlier today. This was up more. It was up. It would have been like a over $2,000 trade if I closed it a bit earlier. Nice move. Good enough move. Like I was gonna close it before, but I was like, I'll hold it till it looks like it's reversing. Like now it looks like it's reversing, right? Like you can see that 46.75 level. Can't even like, why is it like that? That's weird. Nice support there. So, I mean, there's good confirmations. There's confirmations, and there's obviously better, or the trade you wanted, that confirmation, which was like here, right? On the hourly. 46.75. Market was coming down all London session into that move. That's where you got that New York reversal, that New York shift. Nice reversal. Coming into those New York hours, doesn't reverse right away. Like, it's like a window. Look what happened. Like, I mean, look what happened yesterday. Almost around the same time, 2 days in a row, gold was a buy. Like, if you look, this was 11 a.m. yesterday. This is 10 a.m. So you can see the candle almost like relevantly around the same time. I mean, even if you go 11 a.m. there. So you see yesterday how gold was dropping into like early New York hours. Stayed down a bit and then pumped up yesterday. Today, dropping into early New York hours, pumps up a bit. So there you have, like, nice, again, another example of a New York reversal. Know what I'm saying? A nice reversal there, folks. I'm falling out of this trade. It's all good. There's lots of trades come. I mean, I just closed it. There'll probably be another buy tomorrow morning. Like, there was a nice sell last night. Last night there was, a pretty good sell. 47.25. You got a lot of days where London pushes, New York can reverse. If you look at last week, easy, happens a lot. So yeah, obviously if you're taking trades before that, you can get in. Like, look what happened to me today before like prime time. Today market spiked down more but caught that reversal. So you have to be like prepared for scenarios like that, even where it's like, okay, what if you were selling before? Like, imagine if you were thinking sells on gold in here and you were thinking gold was going to go down, but you got that push up, then it's really a sell up here at the right time. Trades into this high over here, to the left, and then it dumps down, breaks lower. Nice break there. So it's like, is this a good trade? Like, if you're selling here, let's say you're selling here thinking gold's gonna go down, was it a bad trade? Was it a good trade? Or is it just having preparation for where and when you took your trade and understanding there could be different prices and different times to take trades at? is that I took an L here, and then I was live streaming when I re-entered. But I waited 2 hours, and that's the thing. Most people don't have that ability to even wait. Most people tried to hide, run away from the loss. I lost and sat with that and talked about it for 2 hours. Because like when people see me lose a trade, they go kind of crazy. People go kind of crazy when they see me lose a trade. And it's just part of the game. Like, that's why most people don't succeed in trading, is because they can't handle losing or know how to. Risk management's obviously key with that being said. But yeah, even this morning, notice I'm not sitting there going, oh, I took a loss, man. What am I doing? What a bad day. I traded the markets and this, that. Like, I didn't sit there and complain or anything about it. It's normal. So how you react is important to losses. Because 2 hours later, I took the next buy. And the next buy was perfect. You know, the trade you want to take, obviously. The trade that I wanted to take more so. Market came right down to 46.75. So yeah, I thought we were getting some rejection here on gold early in the morning. Market went down. You've had some nice rejection candlesticks. Like here, basically, I thought gold was going to hold like that. What the bum? Yeah. I mean, like, where are you gonna look for buys? Really, like, look at this chart. Where are buy signals? Here. That's a buy signal. Here. That's a buy signal if you're looking at the hourly. In here, after that candlestick. You have a buy signal there. I saw one this morning here. So realistically, like, how many buys do you have here? 4 that you could have taken. 3 of them would have worked out. 1 didn't. The one I went for this morning didn't work out. But realistically, look at this chart. You have 4 buys on it. My lip hurts. I bit my lip. So it's like anywhere but those 4 spots, if you're looking for buys, maybe like those, that's what I would say would be a bad trade outside of those 4 spots. I mean, like anywhere where it's dropping, like that's just kind of like the 4 areas where if you really look at the chart right now, it's like, okay, you have buys. So there's time, patience. Like, people are asking me right now, and people are wondering right now if there's like a buy right now, for example. Like, if you're coming on here thinking, is there a buy right now? That's not the way to be thinking. Because if you look at this chart, look at how we have 4 buy setups. So it's like, what frames a buy setup, right? Really have to wait till it presents itself, right? Till a market moves, because it takes a move to make a move. Up here you have sells. On this chart you have 5 possible entries on gold, just here on the hourly. If I go to the 5 minute, I could probably find 2 or 3 more. If I go on the 5 minute and 15 minute, I could probably find 2 or 3 more entries. Like for me, you have like 5 possible entries, maybe 6. If you're looking at like this candle as a sell, over here, this red candlestick, I'm circling, so maybe 6. If I went on like a 5 minute and a 15 minute, I could probably find like 2 or 3 more entries. If you look at this chart here, maybe 6 with that red candle, rejection. Yeah, if you just look at this chart, there's 5 possible entries. If you just look at the 1 hour based off of a singular confirmation, because what does it take to form a bias or to know what something's going to do or where it could go or to execute on something? Like, what does it actually take? Some people like to look for 5 confirmations, 4 confirmations, multiple confluences. If you look at singular confirmations one by one, it doesn't take a lot of confirmations to find like some reason to execute at the right time. So we're going to talk about some singular confirmations here one by one, but starting off with rejection candlesticks, which is the simplest but effective, as well as rejection candlesticks. But yeah, like here you have, these would be the entries, I would say, that would have been good to take, like entries you would have wanted to take, obviously, and there's reason you could have taken every one. There's a confirmation as simple as just one confirmation. I'm going to show you as we go forward, but if you're selling anywhere else but like up here, maybe like in here, obviously, if you're buying on the pumps, it's not the best entries. So this is like where good entries, even though some of them look better than others. Simple color coordination. Red, 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 green. Buy when it's green. Green, 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 green. Sell when it's red. Red, red, red. Buy when it's green. Green, green, green. Sell when it's red. Red, red. Well, you gotta wait for this goes red. This is where it goes red, green, red, green. You want like fluid movement, solidified movement. That often creates reversals. This is how I teach if I were to teach a 5-year-old how to trade, I would go red. Okay, if I were to teach a 5-year-old how to trade, for example, this would be me teaching a 5-year-old. Okay, here you got red, 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 and you go to green. Okay, you buy on green. Now you go green, 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 green. Okay, you sell on red. Now you go red, red, red. Okay, buy on green. Green, green, green. Okay, sell on red. Red, red, you look for more red, buy on green. Red, 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 buy on green. There you go. How to teach a 5-year-old how to trade right there. That would be teaching a 5-year-old how to play the market, play with the markets. Red, 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 buy on green. Green, all right? Don't let that go over your head. It actually works. How to teach a 5-year-old right there. How to teach a 5th grader or something. Like, really, when you look at this chart, so here you have an entry. That would have been like the first, right there, after that candle, right? Let's move these. Oh, we'll keep them there. We'll keep them there. Those are the other spots. So, rejection candles, that's a singular confirmation. Very simple. Rejection candlesticks. Right? Because here again, red, 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 red. Down candles, right? So I'm going to start teaching now. Red, 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 green. All right, guys. It's a red one. You know what to do. It's a red candle. You guys know. I'm going to start talking just with colors now. Colors in the candles. So, okay, guys. Green candle. Bye. So when you're looking to be patient, it's like, what are you being patient for? Well, you letting moves happen, because it takes a move to make a move. Like, it takes sell pressure to create buy pressure, right? So it takes a move to make a move. That's important, all right? Very, very important. Where's the music? Interesting. All right, so rejection. It can look different. Candles can look different, right? You have multiple candles or singular candles, opposite colors, wicks. Rejection's important. Rejection is important to understand as a trader, especially when you're creating these trends. So, like, for example, see here. Rejection. This is what rejection looks like right here. This is what price rejection can look like before a move happens. You can see those long wicks. So you have to be patient to let things happen. Like, you have to actually let markets, like, if you're not in the trend, it's not about chasing it. Like, if the market's gone up and you're not involved, you have to let the market at times do its thing, right? Like, if you missed a move, you missed a move. And at times you have to let it just do its thing. You have to be more patient to know it could set up at a later time. Let the market keep doing its thing. Let it go up more, right? To create that sell or to create that buy. You're not going to be a part of every single move. We got price rejection. This is a really important thing to understand as a trader. Whatever it is you're trading, and these could be in the forms of like candlestick bodies with wicks, can often have long wicks attached to the candlesticks. A long wick is a significant sign of rejection. Like this, like this. You can even see this chart here. This is from December. Probably a trade that I sent out as well. You can see those long wick rejections there. Long wicks coming in. Now, these can happen around support and resistance areas. These long wicks, right? They can happen around zones, key zones, areas of support, resistance, or price. So, like, if you actually look at gold now, yesterday, long wicks. One sec, I'm gonna go to the bathroom real quick. Water. If you actually look at this chart, this is from December. Now, this is in December. Long wicks, those signify potential reversals. They're not full closure, but they can be early signs. Long wicks can be early signs of reversals. So, for example, yesterday, what do you have here? You have a long wick. See this wick? Look at all the other candles compared to that one, right? At the bottom there. Look at every other candle compared to that one. That has a very long wick. It signifies potential reversal, but it's significant. Because if you look at every other candle, it's different, right? Not every candle looks the same. So this red candle is actually a rejection candlestick as well. Not just the green candle. The green candle is too, but that red candle is a rejection candlestick. Has that long wick to it. Something like one of these. The color of the body doesn't necessarily matter. I'm going to show you what I mean in a minute. The color of the body also doesn't matter. It depends on where price is, what that candle did. That would be, and this is important characteristic for gold, understanding these candlestick shapes, these candlestick patterns, because they do happen repetitively. Giving us an entry, man, I don't do that all the time, guys. Like, show up. Like, I don't forecast. That's the thing. Like, I didn't forecast this morning's trade. I took it when it was there, right? I don't forecast setups. I'm not an analyst. I'm a trader, right? I'm not an analyst. I don't do forecasts and analysts. Like, traders who do that usually don't make money, right? I used to teach people that used to be good at analyzing and forecasting. I'm not really a forecaster, an analyst like that. Like, I show up, I day trade, I trade a strategy around certain times. So I give an entry. The thing is, like, I don't know where the market's going to be in London session. I don't know where the market's going to be in New York session. I don't have to think that much. I just go to the chart at the time and see what the price is doing, right? Give an entry. Well, we don't know where the market's going to be New York session tomorrow at 9:30 in the morning. We don't got to forecast that. We can look at what the market's doing and see if the strategy is there. See if there's a setup there. Take the setup if it's there. I'm not always forecasting. Like, I probably spend 10 to 20% of my time forecasting when I'm on these sessions and giving out entries like that. Most of the time it's, guys, I'm taking a trade because this is here right now. Or most of the time it's, oh, there's this. Like, if I'm taking a trade most of the time, or I'm giving an entry, it's because there's something here, right now. There's something to look at, right? I'm not forecasting things. I'm not sitting here going, oh yeah, gold's gonna come down and we're gonna buy it when it comes here. No. We're gonna wait for gold. I don't do that. It's a waste of time for me. I've been trading for 11 years, so I spent enough years doing that I don't need to do that anymore. It's a waste of time to me. I don't go like, I'm looking for gold to come to here and sell it. I mark my zones. I keep my key levels marked, my areas of interest marked. When price comes to them, I pay attention. What is price doing? What is my strategies performing? Any patterns? Any concepts? What time is it? Yeah, I could sit here. Like, if you want me to forecast, here you go. There's your entries. I'll give you 3 entries right now. Here you go. Easy, said and done. You got 3 entries right there. There's your entries. I just gave you 3 entries you could look for. There you go. 3 entries. All right. There you go. There's your 3 entries. There's 3 entries. You asked for an entry, there's 3. There you go. Good luck. It's not about that. Because it's about keeping your levels. Just keep your levels marked. Keep your zones marked. Keep your areas of interest marked. Because if you want an entry right now, you're not looking at what the charts have done already. What entry is there right now? There's no entry right now. Right? Like, like, let's look at the chart. Like, what do you want to enter right now? Right? Like, be logical here. Like, what trade are you going to take right now? Just be logical. Don't be fucking FOMO, greed, I need a trade, I need to make money. Like, what trade is here right now to take? What do you have? Nothing. Unless you want to buy here, because price could just keep going up. You got to understand, gold could just keep going up. And then it's like, what entry do you have? You don't really have an entry here, right? You want to sell, gold could just keep going up, right? It's not at an entry here. There's no entry to take at this point in time. There's no confirmation. I took the last entry I think that was available for the day live. I took a buy here live on stream. If you guys were on stream this morning, I was taking buys here on literally that candle. Right there. You can see my entries. You can see buy, 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 buy. Right there. See? I was taking buys in front of you guys. That was an entry, right? That was an entry. If you want to look at anything and everything at every time, go for it. But you got to be prepared for that. If you want an entry if you guys want entries all the time, here, you got a head and shoulders. Trade it. You got a head and shoulders formation in front of you. Trade it. Trade what's in front of you, what you can spot, what you can identify, what you can see. There's a head and shoulders. You could trade that if you want an entry so bad, right? I could give you 5 entries right now, and chances are you won't catch one of them. Okay? There's 3 entries for you. I'll give you one more, all right, at 4,800. I'll give you one more entry up here. There you go. Wait for 4,800. There's another entry. You still have to be patient. No matter, I can give you guys 5 different analyses. I'm gonna give you what? I'll give you guys another entry right now, and I bet it's gonna happen within the week, and people aren't gonna catch you. I'll give you another entry right now. Here. I can give you guys 10 different entry points right now. 10. I could forecast the charts all day. That's not gonna make you a trader. Here's another entry for you. There you go. There's an entry. Wait for it. You still need patience. It doesn't matter, so there's no point in going, okay, we're gonna wait. Show up to the market at the right times. Look for your strategy at your zones, key areas. Watch for confirmations. What can you identify? Because otherwise, then you're just trading to trade, right? You're not treating it like a job. So I can give you entries all day. If you want entries, there's an entry right there. Wait for it. That's another entry. Here's another entry. Wait for market to come down to 4,600. Here you go. Another entry. Come down to 4,600. So far, I've given you 5 entries now. So I've given you 5 entries there's 2 of them. Well, actually 6, because you could wait for 4,800 as well. Probably wait for around 4,800 sells. So there you go. This is why I say learn what I teach you guys, because then you don't need me. You can find entries on your own. I know where the entries are. The market's just not there yet, right? Where are the entries likely to happen? 47.50 break and retest. You could possibly get a sell around 4,800. Wait for it. 4,600. If you come down to 4,600, you're going to have an entry there. Okay? There's your entry. There's some entries for you. All right? There you go. You got some entries. If you actually want entries there's no point in doing that. There's really no point here, guys. Let's wait for 47. There's really no point. We could just jump on the charts tonight, see where the market's at. If there's a setup, there'll be a setup. Or we could jump on the charts London session. If there's a setup, there's a setup. Or New York session tomorrow. Forecasting, you really need to just do 10% of that, 20% of that. Forecasting isn't your job when it comes down to trading. If you want, you have 40, or you have that head and shoulders forming on the 5-minute. If you want 5-minute, you got the head and shoulders, like I was saying. You got a 5-minute head and shoulders. Trade that. There you go. Trade that if you want. Right, there you go. 5-minute head and shoulders, which could turn into a 1-hour rejection flip, which is happening right around $4,700. You have a head and shoulders formation right there on the 5-minute. That could turn into a 1-hour rejection flip. All right, $4,700. There's an entry right there, possibly. So it's not about me giving you guys entries. What can you actually identify, right? I give you there's plenty of entries, right? There's plenty of entries. People want entries all day. What can you actually identify for yourself? You have a 5-minute head and shoulders in front of you at $4,700. 1 hour could potentially reject and flip. That could maybe be an entry, right? There's a possibility. Every trade you take is 50-50. Understand that. Okay? People want entries, but they're clearly like, what can you spot? Is it even worth taking a trade with what you can spot in certain moments, right? Because, watch. There's an entry. Is that what everyone wants? An entry, you know? What can you spot? What can you identify? Realistically. Because if you can't even see, like, here's the thing. Some of you guys might not even see certain things on the charts. You're like, wait, what? Oh, shit, there's a head and shoulders. There's a head and shoulders on the 5-minute there. We could be reversing on the 1 hour if the 1 hour holds. But at the same time, like I said, gold could just go up. So you have to be prepared for everything. Like, is this a good entry? No. I'm not the best, right? Look what time it is. It's 1:26 in the afternoon now. Is it the best entry? No. That's why I put a freaking 0.3 lot size on it. It's not a good entry to be taking necessarily right now. It could go down. It's not the best entry, right? It could maybe come down to the low if it does. It's light. It's not even like like, this is a trade that I would barely risk anything on. Literally. It's not really even a good entry. It's not the best because the time, right? 1 hour could flip though. Look at the 1 hour. Like, trading's about what you can identify. I'm going over rejection candlesticks for a reason, because look it in front of you. There's one right here. Why do you think I got out of that trade? Because it started forming a bearish candlestick, right? It's like there's a rejection in front of you. You're either going to trade it or not, right? There's always going to be entries. It's like there was literally an entry here on gold for buys. There was an entry here for buys. If you're not catching those entries, you're missing the trades you want to be in. So there's no point in trying to take every trade any moment, right? Like someone said in the chat, that's just over trading then. There was an entry here, like I was mentioning. Like, look at where the good entries came for the day so far, like since yesterday, and there's been a couple entries to catch, right? This is like a shooting star, not the best trade setup, right? Like, I'll probably close that if it doesn't react in 30 minutes. Like, if this doesn't react in like 30 minutes, I'll probably just close it, right? It's not like the best entry. It's not my favorite entry. If it doesn't react in like 30 minutes, I'll probably end up closing it. There's still strategy there. There's still confirmation there that it could go down. I'm going to start sending one trade a week. And be like, guys, one. Yeah, like, if this doesn't go down, like, it's like you could take multiple entries in a day. It doesn't mean you have to like hold fully emotional attachment to every single one, you know? Like, I'll probably if this doesn't go down in 30 minutes, I'll just close it with a small loss. I don't, you know? If this doesn't go down in the next 30 minutes, then I'll just get out of it. And it's like, okay, I went for the entry that was there, was showing, but like that's one thing in terms of like day trading, or if you're trying to take entries as much as a lot of you guys are. Like, everybody wants trades all the time. Okay, you have to prepare yourself for the precautions of that. If you want to trade all the time, you want to trade any hour of the day, okay, brace yourself, because there is risk and psychology in that, and structure. If you're going to be taking trades at 1:30 in the afternoon thinking, okay, this is the bet, like, I got to look for entries all the time. Meanwhile, New York session pass, London session pass movement, you have to brace yourself with risk management and structure. You can't just be thinking that's not a lot of trades, like, because not every trade is a trade you want to, like, some of you guys could probably agree, not every trade is a trade you even want to take. Like, I guarantee there's trades you guys have taken and you've been like, why did I even take that trade? I didn't need to take that trade. I should have just waited, right? I'm pretty sure a bunch of you guys have done that already and gone through experiences like that where you've taken a trade and, for instance, you looked at it like, why did I even take that trade? Why did I take that trade? Oh, that was a stupid trade. You wasted your ammunition. If you're going to be firing a lot of bullets towards the market, you have to be prepared for risk, okay? So there you go. Gave you an entry. There you go. Gave you an entry. I even said 4,700, it could wick at 4,700. I literally even said it could wick reject 4,700. There you go. There's 40 pips. You could have got 40 pips there if you paid attention and listened to what I said. 4,700 wick entry. You could be up like 40, 50 pips right now, right? I didn't even get the best entry. There you go. There's your entry, all right? Everybody wants entries. There, you could have. I even said it might wick to 4,700 and reject 4,700. Hourly might flip. It might. If it doesn't drop in like 30 minutes, it might be one to be like, all right, that's it. Maybe there was an entry here for the time. So like, what can you identify in certain moments is more important than how many trades you take. Like how good you are at actually identifying things, because I can go on the chart any time of the day and give you an entry, give you a forecast, give you something, right? It doesn't mean it's always going to play out. That's funny. So, what can you identify? What can you spot? That's why you got to train your eyes. Why do you think I'm so repetitive with all the lessons I do over and over and over and over again? I'm teaching the same concepts over and over again to help try to train your guys' eyes. Because after 11 years and the amount of hours I've been on the charts, it would be really hard to catch up to the amount of hours I've put in on the charts, right? Get to 100,000 hours on the charts. It's a lot, right? There you go. There's your trade, guys. There's your entry, all right? There's your entry, all right? I hope you listened, because you asked. You asked? I gave you one, all right? I gotta take a shit, man. Fuck. I'll be back, yo. You guys asked for an entry. Asked for entry, man. I don't even take that. People like to say, like, talk and shit. I don't know what There's your entry, boys, alright? I even told you, it could wick to 4,700. There you go, alright? Alright, I gave you your entry, yo. I gave you your entry, yo. I hope you were paying attention, yo. I hope you were paying attention. As I even said, it might reject 4,700. You could wick 4,700. There's always entries, head and shoulders. If you saw the head and shoulders, there's a head and shoulders on the 5 minute, right? That's the thing. What can you identify? Because what if I wasn't here? Would you have been able to spot this entry? Head and shoulders. 1 hour wicking. Why do you think I got out of that trade? Look at the candle. Remember that trade I was in at the beginning of the stream? Why do you think I got out of the buy? Because that candle was showing me, it might be turning around, you know? It might be turning around. Maybe better to get out that buy, you know? Oh, look, now I'm in the sell. All right. I gave an entry. I even took it live, all right? I even noticed how I had a plan already in mind. If this doesn't drop in 30 minutes, I'll probably just close it, right? Notice how I'm already like pre-planning, pre-thinking of what I'm gonna do while I'm executing, while I'm doing things. Risk, right? Because this doesn't have to be the only trade. I don't need to say, oh, I'm gonna put my stop loss here and hold it till stop loss. No, I'd rather be like, yo, if this doesn't react in 30 minutes to an hour, I'm gonna close it, right? If it doesn't give me a reaction, 30 minutes, maybe an hour, instead of most traders would obviously put a stop loss here. That would be an appropriate place to put the stop loss with this trade, above the high, right? Above that wick, right? It's like if I'm getting into this trade, I could say, okay, instead of holding it to that stop loss, what if, you know, I'll see what happens in the next 30 minutes, right? You might have heard me say that. All right? Maybe this trade will get me to 400K. we need TP at the low here, right there. If it can come to here, needs to come here. I mean, for the time it's afternoon. For the time being, you know, it's not like for the time being, you know, it's an alright scalping reaction, right? It's a good scalping reaction. Now notice, and this is what I was talking about this morning. You can get in trades. I was showing some of these trades, and some people are like, oh, you know, a big account, look at these losses. What do you think some of these losses are? They're managed losses. Like, imagine if this trade took me out minus 48. I don't need $200 profit, right? I could try to go for more, right, on this trade. Not what was I risking the stop loss on this trade? Realistically, no. Like, realistically, like, let's be real, was max risk gonna get hit at the time that I entered? Probably not in a short time, right? So it's like not a lot of risk to this trade, realistically taking it. I don't, you know, the profits, whatever. I could try to go for a bigger move and be like, okay, I didn't really have to risk a lot for this trade to get decent money. I'm looking at money too, all right? Not always looking at, like, you know, how many pips I catch or risk to reward. It's like, yo, if I make $1,000, I make $1,000. If I didn't risk much to make that $1,000, I still made $1,000. All right, money's money. Look at some of these trades that are minus 46, minus 28, minus 89. Those are trades that I was planning to risk money, like risk 500, 1,000, 2,000 on, but I didn't, right? Those would have been trades like this one that went into profit, came back to entry, right? Notice, you know, the thing about me is I talk about things and then I show it. I execute on how I was going on a rant this morning. Because, man, I get some crazy messages, I'll tell you. I don't know. It's usually dudes. It's never really girls that are sending me the craziest fucking messages. It's usually freaking the dudes. Usually girls are pretty calm. Usually just like, I lost, sad face. Or whatever. I'll get some crazy messages and it's like, I go on these rants to show you guys it's not that emotional, really. It's not that, like, emotional. Like, really. if you heard me talking this morning, a lot of what I talked about this morning is being shown right now, right? A lot of what I talked about this morning being shown. People asking me, why are you using that lot size on that account? It's just structured. Like, look at these losses. I want you to look at these losses. They're like the losses I showed you, right? Think about the account size, right? These are structured losses. Some of these ones down here will be like normal losses where my stop loss is probably getting taken, or it's like, all right, I got to close this trade, wrong, But these, right? They might look like, oh wow, you're losing trades. No, it's kind of like this position I'm in right now. Light position could do some damage if the market, rejects more. For the account size, like realistically, it's a small position, right? Day by day, I can take a lot of these small positions, right? If 1% risk is $4,000 almost, in a day, I could take multiple of these smaller ones that could add up to a bigger risk. Like 1% is 4,000. If I'm really gonna risk 4,000 on a trade and lose, it's gonna be a good profit, right, out of that trade. How I'm positioning myself, right? So that 4,000, 1%, roughly 4,000. If I'm taking multiple positions in a day or expecting to or preparing myself to, right? With the idea that I could spread this 4,000 out. 500, 500, one trade, 500 another trade, 1,000 another trade. Let's say one of the five, let's say I lose. Well, I'm only down 500. Let's say I lose again while I'm only down 500. Next trade, I'll take maybe a bigger risk. Maybe it's the right trade. It depends on what I see too, what's in front of me, what's happening too, right? If you're taking a lot of trades, which is basically a lot of trades will be trading every day, right? Every day, if you're trading every day, that's a lot, right? That adds up, especially if you're taking multiple trades a day. So some positions, like when I know I'm going to be frequent, because I know it's not the only trade I can take today, most likely. You got London session, you got New York session tomorrow, Tokyo session tonight. You got different sessions where the market's going to be at different prices, right? So I know it's not the only trade, right? So it's like a couple of these can add up, right? They can add up. But if they don't work, a couple of these, if they don't work, it's okay, right? So there's that frequency. If a couple of these don't work, it's okay, realistically. The frequency is there. There's frequency with lower lot size. Like if I'm going to take more trades, okay, let me lower the lot size so I can prepare to get some of those winners, the one, maybe that trade I want, right? Gave you guys an entry, yo. Someone asked for an entry, and I said, all right, you know what? Here. There's a second trade I took live today. Well, third I was, that buy. Third, technically, the buy. I took that a little bit before I got on the stream, and then I closed it when I was on the stream. Where will this go? 1 hour closes in 15. If the 1 hour closes bearish, this is when when you're in a trade like this, you have to gauge the time. So it's 1:45 right now. In 15 minutes, this candlestick closes. So for this hour, it made a move. We can say this hour was bearish, right? Now, you can't expect this hour to go down too much more with the time remaining, right? About 15 minutes from now, the candlestick closes. So this is where you make decisions, right? Where it's like, okay, I'm in this trade. Is it going to be a scalp? Maybe a day trade, scalp day trade? Or am I going to try to swing trade for the day? Am I going to try to really turn it into like a day trade, like actually hold it? That's where you have to look at time and positioning too, because it's 1:45. This candlestick has 15 minutes left on it. Most likely it's going to finish bearish, so that's a good sign. I can't expect this candle to drop so much more. Maybe it goes a bit more. I can't, on average, I can't expect this candle to go down 200 pips, 300 pips. You know, this candle's probably not going to go down as much as it already has, right? It's probably made the majority of its movement for the time. So when you're in a situation like this, what can happen on the next candlestick, right? If I want to hold this trade, I could say, okay, I need this to close bearish to hold. That's one. If it closes bearish, I can say the same thing I said when I was entering this trade. I'm going to hold it for 30 minutes to an hour and see how the next candle goes. So that's where it turns into kind of like intraday, where it's like, okay, it would be like a 2-hour trade in a way, based on the candlestick structure. If I'm like, I want to hold this longer, I want to hold this trade, well, first I would want to see this candlestick close bearish, okay? Saying as if in 13 minutes this candlestick closes. So if it closes bearish, that's a good signal to say, okay, I could hold it longer for the next hourly candle, right? With that next hourly candle, I could have the same mindset as like when I went into this trade. I'm going to hold it for 30 minutes to an hour. If it goes down in that 30 minutes to an hour range, I can still think it's stacking up the thought process one after again. The same thought process just stacked up again, where it's like, okay, let's say the next hour goes down. If I want to hold it longer, I can stack up that next same thought process now and be like, okay, let me see if that next 30 minutes goes down. If it reverses, I can get out. If it starts to reverse, if it looks like the 15 minute, 30 minutes reversing, I can get out. What could the next candle do? So if you're planning on, if it's a trade that I want to hold, I have to understand what the next candle could do as well. Because the next candle opens in close to 10 minutes. So this one finishes like 12 minutes, 12 minutes-ish. So in a situation like this, because you have decisions you can make. You can close full profit. You can go to break even, right? It's like I could close full profit. I could go to break even. Let's say whatever break. Honestly, the reason you see those minuses, because those minuses are like break evens. Those minus 40s, those minus 50s, like this. Let's be honest, with the account size guys, like you'd be probably doing the same shit, right? It might look like, oh, minus, like why not go to zero? But like, okay, yeah, like I can. I just don't want to get wicked out. That's why I'm like, okay, what if I get wicked out, right? That's why some of those minus. Some of them aren't at zero. Like some of these could just be break-even trades, zeros, right? And that might seem kind of stupid because you're probably like, okay, like yeah, obviously it's kind of stupid, right? But I do that. Some of them are like, you know, because I didn't want to get maybe wicked out or something like that. Just the way I was thinking at the time. This could be one of those trades where I could get wicked out, break even, right? Maybe if I didn't want to. It's like, okay, it's not a full stop loss, right? It's like what I'm really risking is not a lot realistic in comparison to what I could make, right? If it really goes down, let's say, even to the low, if it comes down to the low. So was I risking 500 on that trade? Not necessarily. I probably would have lost 500 on this trade, right? Because let's say from when I took it, let's say if it was going up right now, remember what I said? If it doesn't, remember what I said? When I entered this trade, I said, if it doesn't go down in the next 30 minutes, I'll probably get out of the trade. But Now it's gone down in that 30 minutes. So now, the way my brain thinks, the way brain operates from this point, if I want to hold, I'm thinking about the next 1 hour candle. I want this candle to close bearish. The next candle doesn't just have to drop immediately. It could. So we have to understand probabilities of what usually happens, what could happen, right? In terms of probabilities, what usually happens and what could happen, right? Now, what could happen is more when you go on the probable side, and what usually happens, like what usually happens is what it's more probable to happen, right? Like usually what happens is the candlestick starts bullish, right? Usually the candlestick starts bullish when it opens, okay? It doesn't just drop immediately. It can, that's what could happen. But what could happen isn't always what's probable to happen. What usually happens. Okay? It could happen. So, we understand that when we're in a trade, it could happen. What usually happens when a new candlestick opens is it starts to go up. In this case, because it's bearish, it starts to go up. Before making that down move. Like usually the candlestick will start, oops, I meant to go green. Could start off bullish, right? And that's where if like you miss an entry like this, you can still even get in potentially when markets are making those pullbacks. Oftentimes that's where I get in a lot of trades, is when the candlestick rejects. I'll hop in on the next candle when it's pulling back. Because often the next candle could create, usually in a situation like this, on average, and again, I'm just talking from 11 years of trading, so when I say on average, I mean a lot of experiences, right? I'm not just talking from a book I read, right? Usually you can get a situation like this where market could even wick back towards some of the body of the candle before starting that movement down, right? So this is going to close bearish possibly in 7 minutes. Doesn't mean the next candle has to just drop right away. The first 10 to 15 minutes of that candle that opens could start bullish before resuming bearish. Okay? So, not so much up there. Can't find the best examples actually even on this chart. Here you have a rejection candle, but next candle just drops. Here, up here, you have a rejection candle. Next candle did wick up a bit, like not as extent. Yeah, here. Yeah. Here you have a candle that came down strong. Next candle opened, it didn't just go down, it went up, and then that move was continued. It resumed that movement. So here, for example, you have this candlestick. Next candlestick kind of chopped up a bit and then came down. Here you have a wick rejection, small body, wick rejection. Next candle wicked a bit before resuming. That's what could potentially happen on the... There, I gave you guys an entry. Someone said in the chat, give us an entry. There it was. Hey, I did, man. I did, yo. My undercard called. Oh shit! See, I didn't even see. That's. What do you know? I am the indicator. No way. Or was it the other one, the break and retest, like on the whole numbers? I gotta update all this stuff, like literally in the next 3 days. Indicator called the trade. I didn't even notice. I at least check my monitor here. Damn, that shows you something. The indicator was made. Yeah, those indicators are made to be, like, based on how I view the market. And interesting. That's interesting. That's pretty cool. That's actually cool. I didn't even notice too. I'm just seeing that in the chat. That's actually, that says something. That's why I got out of those buys, because it was a shooting star. Hey, I did give an entry. All right. I didn't think I was going to, but it started to clear up. The head and shoulders, was able to see that head and shoulders in time. Yeah, this candlestick was why I closed that buy. Like, I closed the buy at good timing, see? Because I closed it because I saw that candle. I didn't think I was going to hop in the sell, but started to line up 4,700. 3 minutes till this candlestick closes. Yeah, like, next candlestick could open bullish. Like, it could open green before going down. That's what happens with a lot of candles when you look at, like, the closures of them. Like, let's see, bullish. Any bullish ones, like, we can find too. Like, not a lot of wicks. Like, see, this candle closed bullish. Next one just actually went up. I want to find, like, a good wick example here that I'm trying to, like, there's not a lot. Wow. Not a lot of, like, wick examples. Here. Yeah, this one here, actually. Like, okay, found a few. Like, here, green, this candlestick. The next one was bullish, but it didn't start bullish. Like, it wouldn't have just, like, started bullish. It went down a bit. So it would have been red at one point. This candlestick would have been a red candle at one point. Okay? Yeah, usually when we just kind of free roam a chart, we can find, like, way more examples when there's rejection, but right now, up here, yeah, I showed that already. Like, there's this rejection candle. The next candle is just strong. It doesn't look like it started bearish because there's no, like, bottom wick here. So the next candle just went up. You can see, like, wicks, how they form. Like, here, this wick here, little wick. So this one actually would have been red for a bit. This candlestick would have been red for a bit. Just, like, a bit before going up. It's just candlestick analogy. So at times you can have, like, a possible pullback entry. Like, I really want to find, like, a good, here's a good one. Here's a really good, here. See, this is, like, what I'm looking for. See, like, this green candle, nice green rejection. See, the next candle would have been bearish, and that's where a lot of traders get faked out, is when candlesticks. So, like, you might buy on a candlestick, you might buy the market, and then you see a candlestick going red against you, and you're like, oh shit. A lot of times I'm entering in situations like that where the candlestick's even red, if it's bullish. Like, here's a good example. This one's a really good example because it, like, comes back down to, like, the body of the candle. You have, like, this green candle. Next candle would have started bearish because you can see how it wicks down to here. Okay? Before going up. That's candlestick 101, candlestick analogy, like 101 right there. What I'm talking about, like, just understanding candlesticks. Ooh, damn. Decent trade, decent little lunch. Eh? I'm gonna crack 400K this week. Probably tomorrow. Maybe with this trade. Like, this trade. Damn, yo. My indicator, send a picture in Discord. I want to see. I'll pull it up in a minute. Someone said my indicator called a trade. That's pretty cool. What do you know? 4,700. That. Hold it down to 46. I mean, if it's a distribution happening up here, now that it's moved so much, like, where it was when I was talking, when the candle was up here more, like, I didn't actually think it was gonna dump this much more. I thought we would have stayed more gradual up here and wick back. So like, see how this candle's starting green? See? Most candles will start opposite direction, right? That's where a lot of traders get faked out. Because this candle just opened, and in 1 hour from now it could drop. Like, it could try to continue the previous candle's movement. I could try to continue the previous candlestick's movement. Know what I'm saying? That was a good move. Like, for the time, like, that would have been, this is a good scalp. Like, if you're in, like, not bad time to take partials. Like, this would be like a good take profit level. Secure something, secure some partials. Not a bad afternoon. 400. You know, light afternoon. It's a late afternoon, but the count's still just under 400,000. Know what I'm saying? Yeah, that's the thing about gold. Gold is gold. Gold always just sets up. Nice move. Decent move. Like, for the time, like, catching moves like that, getting reactions like that are good moves. Like, it doesn't always have to be like looking for the biggest moves, hundreds and hundreds of pips. Like, getting reactions like that are solid. Like, you can see how the markets can move. I gave an entry, a light entry. Gave one this morning too. So now everyone's gonna ask for another entry. Here you guys want another entry? they're like, there could be. It's just like waiting for love. That's the thing. Like, I didn't forecast this trade before I came on this session. You know, took it live in action. Like, this trade, it wasn't something I was thinking about yesterday or before this session. There was that head and shoulders that I mentioned, stuff like that. Interesting. Light move. We'll analyze gold one more time before I get off. It's pulled back quite a bit. Bounce. Like you can see this candle's starting bear. If it's gonna continue, I was saying this candle's been in, what, 8 minutes? Yeah. Yeah, like usually when a candle opens, I can start the opposite direction. So if this is gonna continue, it's about time, 9 minutes. This candle's been open. It's about like time, right? And that's where like one of these types of trades, like not every trade has to be a black wall or a brick wall, like a stop loss, for example. Okay, move the stop loss. Who cares, right? Not every trade's gonna be infinite, right? This could be a trade that literally just comes back to break even. And it's like, okay, what reacted, and that was there. You're gonna have a lot of trades that are like that, most likely. Like if you're taking day trades, you're getting in and out of positions. That's why I was even saying this would down there when it moved with the reaction it got moments ago. I was saying this would be like a good area to take profits on, right? Maybe even partials or secure something. If you're day trading gold or anything like that's volatile, like gold, and moves daily, consistently, you're gonna take trades like this. That a good amount of trades you might take will be like positions like this that react for a good moment, and then that's it. That's all it does. Not every trade's gonna be a home run. Like not every single trade, especially if you're executing daily, every other day through the week, not everything's going to be a home run. So if you're aiming for home runs all the time, if every trade you take you're aiming for a home run, like I need to catch this many pips, I need to make this much money, I need to risk this much to make this much, if it goes here I'll make this much if I risk this much, right? That's not how most of your trades are going to be. Majority of the trades you take could be ones like this that might hit a break even or come back to entry, and for a minimal amount of time from when you got in, it reacted maybe in an hour, a couple of hours. Especially with gold, like gold's very reactive at different times of the day. Like it pumped up, now it's come down. So for moments, like what's there is at times going to be like the maximum you can execute on, like maximizing on your profits. A lot of times it's just going to come from good reactions like we just saw not that long ago, like good reactions, good movements that happen even in a short period of time. Those can stack up. Those types of reactions, those types of things can stack up. Yeah, that's where it goes into like decision making, what makes you the most comfortable. Because if like getting reactions like this, getting like the thing is, you can be consistent in getting reactions like this, but not secure the profit. The problem most traders have is holding these trades until their stop loss. This is the problem most traders have, is getting in trades, holding them completely till their stop loss. Like I was saying, a stop loss isn't a brick wall. It's not a infinite defining point of, you know, if it goes here, it's just a risk point, right? Parameters. Like most traders will hold trades like this until their stop loss gets hit. All of their trades. Versus, okay, I'll go break even, smaller loss, break even, secure some partials or something. Because like I said, a good majority of trades you take will probably be like this, where you get a solid reaction in a window of time, and that's it. That's what the market does. From there, it goes up, and that's it. That setup existed in that moment, right? So going for home runs all the time, these moves are more easy. Like these moves where it just moves in a period of time happen day by day. There was a buy this morning. If you've been tuned in, I took a buy live this morning here, and I took a sell live here this morning, or this afternoon. Took two trades. Took a buy down here, and then I took sells up here, both in front of you guys. Look at this accumulation. Yeah, gold's either accumulating up here. It's interesting price action because it looks bullish and bearish. Gold does look both bullish and bearish, to be honest. Looks like it wants to go up, but also at the same time diverging around, like accumulating around. It's been forming accumulation patterns up here. So yeah, like securing profits, like this isn't a trade I'm gonna hold till stop loss. Like I'll just close this right now, I think. Yeah, see, like, for instance, it's like a break-even trade for me, right? This is probably going to be like a break-even trade, right? Unless this hour flips down in the next 45 minutes, realistically, right? Like, this is probably going to be like a break-even trade for me, right? But I don't have to hold it till a stop loss, right? Not every position has to be looked at like that. It'll probably end up turning to a break-even, but that was up almost like $500 there. It was a good move for the time. Some people asked for an entry. I gave an entry. I'll go over analysis. Might be a break even. It just depends, like, what this candle does. Like, this candle started bullish, as you can see, right? However, there's time left on the candle. It could create a wick, and in 30 minutes, 40 minutes, it could be going down. That's where, like, in terms of, like, probability, what candles do, you look at the market from that point of view. Like, we had a rejection candle. If we're going to get continuations on this candle, there's a time, right? There's like 30, 40, 45 minutes left on this candle, so. I've had times where I'm in trades like this, and the market's like at this point, in the last 10 minutes of the candle dumps or rises. I've had lots of experiences like that where in a trade, candlesticks fluctuating. Last 10 minutes of the candle, for example, ends up dropping like crazy. I've had experiences like that time and time and time again in trading, where you're in a trade. That could even, like, something like that could even happen. In the last 10 minutes, this candle could start dropping to the downside. And that's where it's like, that's where it turns into, that's where it gets crazy, where imagine in the last 10 minutes, this thing's just dumping down. Yeah, it's like decision making. Sometimes it's even about, like, making decisions that take away emotion. You know your emotions. You know how emotional you get. Like, if you're the type of person who takes a trade like this, and you get in a trade and it comes down, but then this candle spikes up and you're like, oh my God, I should have closed. I should have took profit. That makes you emotional. So moving forward, you want to make decisions that don't make you emotional. So if, like, majority of the time, if pullbacks make you emotional when you're in a trade, you're better off securing your profit when you see a certain number, or even when the market makes a significant movement, right? Versus just holding. Because, like, certain things might make certain people more and less emotional in the markets. And you could be in a trade that's going in profit, and you could be excited. Because, like, yeah, the trade's going, it's going, right? going your direction, and then a pullback happens and you get upset. Maybe you lose that excitement, right? You might lose some of that excitement, like, oh man, what's going on? So you have to look at yourself and become self-aware like that too. You have to look at, like, when you're in trades, how you react to things, because you could be good at getting reactions like this and just securing them. A lot of traders make the mistake of getting themselves in good trades, maybe like this, but always holding them till stop loss. Like always holding till stop loss, making the stop loss something infinite. So you got to look at your executions, how many trades you take. On average, do you get yourself in situations like this where you're in profit? Are you in profitable positions majority of the time when you're taking trades? I was just watching honestly, I'm just watching it. I wanted to stay on and see how this candle went. And then probably going to get off after this candle. I'll probably get off after this candle's like done, you know? Yeah, it's just fluctuating. I'd be like, it's just time. Like when you're in a trade, it's not about, I'm always guessing. Like you're in a trade, market's gonna do what it's gonna do. It's either gonna go down in the next 30 minutes, or it's gonna stay where it's at. So it's not about overthinking. Like, oh my God, is it gonna go down? Is it gonna go here? Just time's gonna tell, really. Keep things simple, less emotion. When you yeah, I'm watching the candle. Music, I don't know, my volume is being weird, yo. I don't know what happened to my volume. It's acting up. Like candlestick, like if the bearish candle closed higher up, the same thing would have happened, right? You just would have got the wick up higher. Imagine if the bearish candle closed a bit higher up. Again, like I said, it would have started bullish and maybe came closer back to here. This candle still could drop, but, you know, it's the time of the day too. Afternoon here. So yeah, trades like this either break even, secure the profit before market reverses back up, because it could try to reverse back up. Gold has had an interesting week. It's been chilling. Yeah, literally gold's just been pretty sideways. Yeah, gold's been pretty sideways here. Bearish and bullish, but to me it's in a consolidation potentially. Like, price literally has been sideways since last week, last Wednesday. You can see how sideways gold has been. Breakout coming, possibly. I do feel like breakout could be possibly coming. Inner Circle 2.0 is literally starting in like 7 days, like the next week. Gonna go down. I think it's gonna go 704. I think it'll go up either way. Yes, price is bouncing around equilibrium for the rest of his range. What? There's a lot of stuff. There's a lot. What did that chick? Don't worry. Don't worry about what the chick said. It's funny. Yeah, no momentum. No volume. Yeah, it's the time of the day. Like, you can't expect everything, right? Like, at this time of the day, and I even said at the beginning, like, I took this trade, like, you can't expect like huge movements right now, home runs. It's when I took the trade, it was like 1:30 or something in the afternoon, 1:40. So remember, like, you can't expect like everything and anything right now with volume. It's afternoon. Cheeky little entry that came. Yeah, gold's been pretty much just consolidating, yo. You know? I just gotta schedule this appointment. I'm scheduling an appointment right now for something next week, so let's see. What day is it? 13. Yeah. I'm multitasking right now. I'm not just like I'm doing some stuff right now. I got an appointment I gotta schedule. Doing some stuff. That's why I'm on my phone. I'm not on MetaTrader. Tonight, and we'll see. I think breakout's gonna come on gold on the bigger picture. That was a little cheeky trade, like, for the time of the day. It's like, okay, what to expect. 4-hour candles are bullish, so I might be a break-even trade. That's what I was saying. For me, it's probably gonna be a break-even trade. Silver, $88. Silver's up. Silver's at 88. Oil's down. Oil took a little doozy today. Look at that. Sheesh, hey? Oil down. S&P, oh my. New record today. New record. Yeah, oh yeah, look at that. Look at that, eh? S&P. New record today. Since yesterday. Nas, new record highs. Damn, stock market's just on one. Crazy. US 30s building up. Oh yeah, US 30s like building up here. Apparently. Fucking Google. What's going on with Google? Because AI and stuff, man. AI and... There's another thing. Never mind. Damn. Stock market's going on like a historic run right now. The stock market is going on like S&P. Oil's down, yo. Oil. Diddy oil. Oil down, gold up. Oil down, gold up. Silver's up. Oil down, gold up. This is gonna be another buy, yo. I know I'm in sells, but that doesn't mean I'm not looking at sells long term. That's why I have it at break even. I was looking at like long term, I'd maybe have like bigger stop. Like I keep the stop loss. Maybe I want to, but nah. Right now, oil's down. Damn, yo, oil took a tumble today. 6-7 in the morning. The 8 a.m. candle just dumped for oil. What's going on with oil? Who's got the news today? I haven't even been really watching the news as much. Like, it's been chaotic. Like the first weeks of the war, the first month of the war, it was news. It was just every day. Every day it wouldn't stop. It's still like, I've been keeping like less time looking at the headlines. Still every day, every hour, I think like every hour there's a new headline. Breaking news. I don't know what Trump said today. Maybe, did Trump say something? I haven't looked at what Trump has said today about anything. I know he's on his way to China. Trump's on his way to China. Or I think he's touched down in China. Yeah, Trump's meeting in China, yo. That's pretty big. Right now. Pretty sure he touched down already. And... let me see. Where did I put that? Yeah, he's got like these companies going with him. Full list of business executives that are joining President Trump on a trip to China. It's pretty cool stuff. Interesting companies. I like looking at the BRICS news because that's who like Trump's against. The BRICS, Brazil, Russia, India, South Africa, you know? I like looking at the BRICS news. Some might say it's bias, but it's Trump. The BRICS, you gotta think of the BRICS nation, yo. That's why Trump is doing what he is doing too. BRICS nation, the alliance. Trump's going after, you know, Trump's chokeholding that as well. The BRICS alliance. 51st state, Venezuela. China says there's no winners with the war. That is pretty true. You could say. Oh, Nvidia. Yeah, Nvidia's going. Was that on there? Nvidia? I didn't see Nvidia on here, but yeah. It says Elon Musk, Nvidia's CEO, other top CEOs are on the way with him. Yeah, he got in China like 6 hours ago. Talks with the President Xi of China. The Trump brand has become toxic. Yeah, I think they're gonna discuss trade negotiations, maybe putting an end to the war. We're gonna see. Um, Probably business too, trade negotiations. Oil's gushing down today. Dollar's still kind of strong at the moment, so that's why gold hasn't really surged, I think. Silver, however, is a lot stronger than gold right now. Dollar would need to really reverse. Yeah, like this week, like gold hasn't really had like a whole lot of price action so far. Even since next week, like we've just been sitting in this sort of rectangular formation here on gold, chilling above like $4,600. Keep trying to come back to that 4,700, right? Chilling above like 4,650, 4,700. We've just been sitting there, so like time is at time. Like when you not trying to predict if it's gonna go up, if it's gonna go down. Like trying to look for entries, taking them for when they are. Oh, we're going back down. Yay. Oh, look at this trade. This trade, I wanted to hold it until the hour finished to see. Good, 10 days. Why did it work this way? See how the hour's looking. This thing could, maybe it drops in the last 20 minutes. If you guys have any questions, type in the chat. I'm gonna answer like 3 questions before I get off. Maybe 3 or 2, maybe 2 or 3. Let me know if you guys have any questions in the chat, but I'll answer like 2. Maybe there's a good question. Gonna wrap it up in a little bit. Probably gonna be streaming for London session tonight or closer to London session because I streamed in New York session. If you're live this morning, I was streaming. Stream now. Well, like we've been on for 2 hours here, so we've been on for a bit. Probably gonna wrap it up in a little bit here. This trade's just been floating. The hour has like 22 minutes left on it. Not a lot of volume in the market right now. It could try to push down a little bit like it did. Not a whole lot of volume though. You funded me soon. I got a lot of stuff. What's number 1 indicator for you? My indicators, the indicators I use. I've made some indicators that have worked well. The tools, inner circle indicators. Honestly, like I just keep moving, like moving averages or something simple that I just keep on my chart all the time. Like, I mean, indicators are to each their own because I know people who use indicators I've never used that do good with trading that say they're the best. Stochastic. RSI. Like I don't like a whole lot of indicators, just like a few, like stochastic RSI. That's a decent one. Moving out, simple like indicators like this, right? They're useful. Even with how I trade, the things I teach, like literally rejection candlesticks while the market's oversold. So for example, like when the market's like say oversold, like here you have a rejection candle while the market's oversold. So like most traders look at this indicator and they'd be like, oh, the market's oversold, I gotta buy. Not necessarily. Like it's waiting still because the market can stay oversold. Like so you can see like you have markets oversold here, and then you have a rejection candle. So like that, like that's a confirmation. So like see last time it was oversold here, see how it's oversold over here. Market's coming down, it reached oversold momentum, right? Rejection candle forming sort of while the market's oversold. There you go. I mean, same could be like when the market's going up. I mean, here there's a rejection candle while it's overbought. Or even like over here. So, I mean, gauging out the indicator like that, most people just buy right when it's oversold. You got to wait for like, okay, here's rejection, even though that one didn't really work. Strategy is still strategy. That's one thing people have to understand. The reason most traders, and a lot of you guys have wasted time trading, is because you spent probably a year or two just jumping from strategy to strategy without actually sitting and applying one and testing it through different conditions, through different experiences. You could have any strategy in the world, any indicator, any concept, the best strategy, the best indicator, right? If you don't test that strategy and apply it in different market conditions, different environments, wins, losses, trending markets, choppy markets, consolidating markets, every strategy is going to be the same at the end of the day in terms of hit rate, win, lose. You're going to win trades, you're going to lose trades, you're not going to win every trade. So it's like strategy. The reason like a lot of people waste time in trading is because they'll jump from one strategy. They'll learn a strategy, they'll watch some videos on it, learn it, back test it. You back test it, it's a perfect strategy when you back test it. And then you go trade the real markets. And you might have a good week, maybe 2 good weeks, or you might have some ups and downs. You might trade the strategy. Until you have like a bad week, you're probably going to be like, you're going to trade the strategy until you have a bad week. And then that's when it's on to the next strategy, right? On to the next strategy, on to the next strategy. So you got to be very practical in trading sometimes and just, you know, not every strategy even works. I could teach you a strategy right now with this indicator. Buy when it's oversold. Wait for a rejection candlestick to buy when it's oversold. That's still not going to work, right? I could show you it. And show you how it works, but it's still not going to work every time, right? I could literally show you examples that work, right? At the same time, we're going to run through things that don't work with the same strategy, right? So it's not about looking at those things and ignoring them and trying to cover them up or trying to be perfective, right? So there you got 4 entries, 1 strategy. Oversold, rejection candle. Simple, not a lot, right? So once you're oversold, wait for a rejection candle, or vice versa. When you're overbought, wait for rejection candles. That I could pull up any indicator because I have a lot of experience. I know most indicators and teach you a practical strategy like this, right? That actually you can see trades on. Right? It doesn't mean every trade is going to work. So that's why when you're going into like, when you want to flip an account, you want to scale an account, you want to grow an account, you could keep the risk the same. Because what if like you're trying to flip an account, first trade you go all in, and first trade's this trade, you know? So when you're trying to grow, it's good to have like a risk set. When you're trying to scale, it's like, all right, I'm going to start off with $50 per trade in risk and not go over that. Oh, see, remember I said how the hourly could start? Oh man, this is interesting now. Remember how I said it might drop in like the last 10 minutes of it? Bro. Ah, yeah. Y'all don't know how much experience I got, alright? Ah, man. Holy, look at that. Look at that. Look at that, lads. Look at that. Look at that. Who am I, huh? I hope you guys listened to everything I said, because, like, I don't try to predict the future forecast, but, like, if it's in the moment, it can be easier to do, because I've been in moments like this so many times. After 11 years, you got to remember, 11 years. Why would I say the things I say after 11 years? You know? About the candlesticks, the analogy, just the thinking of it. You know, the whole, if I'm going to hold this trade, I'm going to hold it for 30 minutes to an hour longer, that type of stuff. Little things like that, right? You funded call. I got a message. I got a message. We all got busy, and then with the website and everything, we just got super busy. And website and just recording and stuff with Leo here, it got a little hectic. Yeah, I gotta hit him up and do that. Yeah. Let me text. Yeah. We gotta do that. There you have it, folks. I stayed on. The reason I stayed on so long here was so we could see what the candle did. So hopefully you guys learned something about candle analogy. Oh damn, we're breaking the 400. Shit. We're breaking the 400 live. Maybe we're breaking it live. Maybe we're breaking the 400K live. How long have I been streaming for? I don't even know how long I've been on. 2 hours and 38 minutes. Guys, I might be breaking it live. If I close, I could close it right out there. Breaking the 400 live on stream. We're getting there. One trade at a time, folks. It's one trade at a time, all right? I told you guys, one trade at a time. Shit. We're breaking the 400 live, potentially. Who showed up today, though? There's a lot of value in this session, by the way. I hope you guys understand that. There's a lot of knowledge in this session, all right? A lot of knowledge. My laptop looks foggy as, like, dusty. My laptop is dusty. Damn. She's going. Wait. Oh, where'd it go? One trade at a time, folks. One trade at a time. One trade at a time, all right? Hey, it all started with Buddy who asked for the entry, all right? Thank you. Got me activated. One trade at a time, folks. We're breaking the... Wait. Activated. Buddy got me activated. Whoever asked for the entry, someone was like, give us an entry or something. That was like a bit ago. that person got me active, you know? We are breaking the 400K live on stream. We are breaking the 400K. I'm posting an Instagram story. Live on stream. Maybe we are. I don't want to. What's that word? We are breaking. You know, when you speak things too soon, you don't want to talk about that. You don't want to talk about your trades like too. It's gonna do this. Jinx. You don't want to jinx your trade. You know. It's like the screenshot curse. You take a screenshot, and it's like that was it. I'll just post a little Instagram story. I did say this morning I was gonna break 400K this week. We are breaking. Maybe not. Maybe I jinxed myself. Now it's like, okay, move this here. Time to move. Now it's like, move this down more, secure something at least. Like that type of thinking, like moving forward, it's like, where do you think from here? Because now the market's at a low, a good place to take profit, to be honest. Like it's at the low, it's at a support, right? You see how it's bouncing? It's like at this point, I don't need to have that there. That could go there, anywhere, right? It could go here, right? Something is at least secured. There wasn't a lot of risk for this trade, especially at the count. This wasn't a high risk trade. We might not clear the 400K on the count. On the live, we almost did there. If I just closed, we are breaking 400K live on stream. I took another trade this morning, live on stream. Kind of uses some of the same angle. Like look at the reversal I caught this morning was buys down here. Right. The trade I caught on this stream was after this candle. These are rejection candlesticks, right? When we talk about price rejection. We are breaking. Candlestick rejection, price rejection. Look at the two entries that I took on stream. One was earlier here. There's a rejection there. I could have took it after that candle. Candlestick that rejected up here at the top. Next candle comes down. So even like when you're thinking about candlesticks, it's like if this candle rejects, I could hold for the next candle. Like my trade here was really like the candlestick of thinking of like, okay, this next candle could go down. See, whoever's been on this session the full time, we had 800 people tune in. There's like 100 people live now. Out of the 800 people that showed up here, 100 of you stayed the whole time. These lessons are what's going to actually really teach you. Out of the 800 people that came on, 85, 100 of you like stayed the whole time, really. Out of the 800 people, and that just goes, like, it's just going to show you, like, over time, what you'll realize is that most people want results. Most people want more. Most people want to put in the work. Not everyone's going to, okay? Not everyone's going to be here for these moments. And moments like these are important, right? Not everyone's able to show up, responsibilities, life, right? Not everyone, like, the moments like these, I can't teach later on, in a way, right? It's like, how do I break this down? Like what we were talking about an hour ago, right? Like, how do I break this down an hour ago when when you guys can see it happening, right? That's why I stream so much for you guys. because I have experience to be in moments like these and talk about them and understand more about what happened, why, this and that. So I stream a lot so we can get more experiences, more moments. That's how you guys are going to really learn and catch up. Is by moments like these that took me years to understand and years to go through, years to develop, years to practice on my own. Can easily share them with you guys. I think about that real quick. Moments like these, like you can't really teach. Like I'm not gonna teach this in a YouTube video. You know, I could do a trade breakdown and be like, yeah, there's sell here, but think about a trade breakdown video. It's entirely different, right? So moments like these matter, and that's why I stream a lot. And if you haven't been tuned into my streams consistently, moments like these happen on a lot of streams. Not just one, not just two here and there. A lot of moments like these, okay? Over time and time again. That was a light setup. I could have went bigger risk, but you know, we always got more. You guys see how much trades I take here and there, like especially when I'm locked in the weeks. Like there's always going to be another trade, another setup. This thing might be pulling back now. We can reanalyze gold, like, or tonight. I'll probably hop on the charts tonight and see where things are at, because it's 3 p.m. now. Markets are going to close in a little bit. Can't expect gold to do the most. I know he said that, but there was a good move at a time you wouldn't expect, but yeah, you have like a shooting star formation. There was this candlestick here, long wick rejection. It's kind of like one of these candlesticks here. You could see similar, or again down here but opposite direction, longer wick, or up here, this one. That's like your shooting star formation right there, bearish. If you're in the inner circle, there's videos about that in the classroom as well. If you're in the inner circle, I think like literally in classroom, I have videos just on singular candlesticks. There's a section on candlestick patterns, singular candlestick formations, candlestick rejections. That right there, if you're looking at those 3 candlesticks, for example, those would be rejection candlesticks. That was a good move. We're gonna break the 400K this week, all right? And then we're gonna go road to 420, 450, 500, all right? We gotta get to 420. Like that number. 425. We gotta get to 420, 425. About it, we were like right there. It was at like four something. Could have closed. Round numbers. Rejection candlesticks, basics. If there's videos, if you're in the inner circle, I know I made the section. It's been a while because I made these like last year. Last year, like literally. Japanese candlestick patterns. We talk about this stuff in here. Why they're important. Singular candlestick patterns. They do matter. Literally the one I clicked on. There it is. We have like this in the inner circle. If you're in the inner circle, right, like there's a section where I talk about even the importance of candlesticks. This is like some of the basics that people don't master. Like this stuff, you gotta master it before you try to evolve into all the, like, the crazy smart money concepts. Like, before you try to do like crazy concepts and perfect things, make sure you've mastered the basics, right? And mastering comes from refinement. Like mastering things comes from refining things too. Okay? The count could have been at 400K, because if you were on the beginning of the session, I was in a buy and it was breaking 400K, and then I closed the buy at 1300, and the sell could have been above 400. But like mastering also comes from even like refinement of things. Like, okay, just refining, recognizing, refining. So there's even like a section where I talk about this. Like, if you're inside the inner circle, there's a video where I break this like similar pattern down. Right here. There it is right there, literally at the top. You can see, like, if you look at the video, it's literally the exact same pattern. Remember, I made this a year ago. So, like, same stuff we're talking about a year ago, still to this day, I'm using live in front of you guys, right? Same stuff. If you look at the chart, there's like 3 of those patterns here. You have one up here. I was trying to call a sell. If you're in the inner circle, I was literally trying to call the sell there last night, like right there at 47.20, 47.25, when I saw that candlestick rejecting here. If you're in the inner circle, I was literally trying to catch sells there. I got in, but a small position, like small, late after it started rejecting. It didn't pull back as much. I ended up getting in at like 19. But there, you have like a shooting star formation at around a whole number. You even have another one here and another one here. So yeah, we're just warming up. Last week I took a vacation, I haven't had a vacation in a while. Leo's been here. We've been recording and stuff. So my routine has been all over the place with Leo here. Trading routine, at least. But yeah, one thing is master the basics. What do you think will go down? Number one indicator. You funded meeting. I'm looking for questions. No questions. Any questions? Crypto? Anything about crypto? No. What's crypto doing? Oof. Is it time? Shit. The bull trap. Is it in? Is it coming? Shit, yo. Are we going back to the 60s? It looks like we got resistance forming here at 82, 80K. Bitcoin could go back to the 60s if it rejects this area. So like opportunity coming for potentially cheaper prices. If you've ever been someone who wants to get Bitcoin, like it could drop down to the 60s one more time if we hold this area. I think there's some big news for crypto tomorrow, and usually positive news brings out positive sentiment. Sometimes a lot of times price will go up before positive news even comes out. You might see positive news coming. It's like, all right, this day is coming, positive news is coming. A lot of times, when you have positive news, the markets can start going up before that positive news actually comes out. I think tomorrow, what's happening tomorrow? I saw this. This is cool, yo. I would get it. If Dogwhip Hat goes back up next year, 2 years, I might get something like that, yo. Shit. Should have. I could have at one point. And I kept holding that dog. I held that dog, man. Damn dog. That damn dog, man. Trump says markets will go through the roof when the Iran war ends. Ahead of leaving for the U.S.-China summit, President Trump shares his market prediction. His thesis: war ends, oil gushes. That makes sense. Inflation drops. Golden age of America. So that's Trump's thesis. Once the war ends, they're talking a lot about the war ending. And yeah, there's the U.S.-China summit. And because of the war, it's happening now in May. It was actually supposed to happen, and then the war happened. Some leverage. Hey, Trump, look at Trump playing the cards and some leverage, eh? Trump's going to go to China and be like, hey, listen, I'll end the war if you do this, this, and this. Okay? Something like that, watch. Because this meeting, this China, the U.S.-China summit was supposed to happen, but then the war happened. Right? Shooting star, shooting star is a candlestick formation. So in trading, like the basics, when you talk about the basics, you talk about candlesticks. So this is in my intermediate course, trading intermediate course. It's a little bit basic intermediate. So you didn't like don't. It's not like a basic question because candlesticks are obviously basic, but having an understanding of them is one thing. Like, is it really basic? Because you can master that basic stuff, that content, right? That the material, right? So when we talk about candlesticks, there's different levels of candlesticks. What is a candlestick? How does a candlestick work, right? Why are they important? And then you have candlestick patterns. So a shooting star is a candlestick pattern. You have different types of candlestick patterns, okay? You have singular candlestick patterns. You have double candlestick patterns. You have triple candlestick patterns. Formations, right? These types of things. A shooting star, seen here, is a bearish candlestick formation. Not every candlestick is going to look the same or be equal, but candlesticks can differentiate from each other in terms of what they look like, and then we can identify those as patterns, okay? Not all candlestick is equal, but they can tell us something. So when we talk about like a shooting star, that's that one there. A shooting star is the opposite of a hammer, okay? So when we talk, just recording some stuff. Maybe my camera here. There you go. So a shooting star, that's the opposite of a hammer. If you look here, you have bullish, you have bearish candlestick patterns. Your eyes might be better at spotting bullish more or bearish. Like, honestly, some traders like bullish more, some traders like bearish more. However, they basically mean the same thing but opposite. Like, bullish, you have what's called a hammer candlestick here. Bearish, you have a shooting star. Okay? So, like, here you have evening star formation. Over here you have morning star formation. That's this strong body candle, like a strong bullish candle, followed by like a doji here, and a bearish candlestick. Tweezer tops, tweezer bottoms. Hanging man, inverted hammer. So bearish engulfing, bullish engulfing. We'll come back to Bitcoin. That's looking interesting, like I said. So 1 hour, let's go, like, for example, where is it? We'll go right here. I'll go to replay mode. So like here, for example, that candlestick formation right there. When you're looking at this, for example, we have candlesticks, right? Candlestick patterns. So this will be a shooting star. It classifies more as that. Like, if we're looking at, this is the picture of it, you know, it doesn't have to be 100% identical, but very similar, right? The behavior of the candlestick. Because what this tells you is that this candlestick tells you that the market was extremely bullish, pushing up with pressure. It was a green candle. So at one point, this was a green candlestick pushing up. Market came down, reversing that, flipping bearish. So at one point, it was extremely bullish, but then it came down. That's like your shooting star. That's a common reversal pattern. Okay. If you look here, there's another one here. And market was kind of choppy down there. And then, like, while I was live on stream, oh, you look at like this. This is like the same type of behavior here. This candlestick. the behavior of it. Small body. But it tells you that the market pushed up. Like the market was pushing up. Like if you're watching the chart in that moment, it's something you would have seen. You would have seen the market pushing, but then it came down and wicked down. Shooting star formation. Next candle drops. And now we're where we are with gold, right? It even went down more. So like candlesticks have different characteristics. They have the bodies. The bodies can be different sizes. And they have the wicks, right? The wicks, those can also be different sizes. Where those wicks, like the side of the chart they're on, like where they are coming from. Like if the market's really been pushing up, it's been pushing up, and you're getting candlesticks that are forming like wicks on them, like wick formations. That is like a strong signal of momentum shifting. When is the best time? I wouldn't really consider there a best time, because that's the thing. Like you have, like, think about it. In a day you have 20, like if you're looking at a day of price action, you have 24 candles on the 1 hour, right? That form in a day. You could have multiple that form in that 24-hour period at different times. So I think it's a confirmation that stands alone, even like at different times. So you could have the 4 hour, like if you go on the 4 hour, we might not see as many on the 4 hour as we see on the 1 hour, right? So on the 1 hour, it might line up. Like if you're looking at the 4 hour, look, you have a shooting star right here. It's a green candlestick. It's not a red body. That doesn't matter. The color doesn't matter depending on where the chart is too. Like if it's high up, green is okay as long as the behavior of the candle is the same. Like you have two on this chart that you could really see. One right here. That's the 4 hour. So there's like a 4 hour identification there. What price is that happening at? Another question, like is that happening around a key price? 47.50, a wicked above. Here's like 47.50, is 46.50, I think. Even 25. Afterwards, 25. Like that is a strong sell signal. This will be the opposite right here, a hammer, opposite of that, right? Like if we were looking for just very identical, just looking at like clear ones to show you, clear picture ones. You have more on this chart. That might be a hammer depending on like the body. It looks like a doji though. So I mean, rejection can come in different sizes of candle formation, candle behavior. Like this is a long wick, which is very similar to this long wick when you go on the 1 hour. Like if you're looking at this is on the 4 hour here. If I go on the 1 hour and I look at yesterday, you can see a similar candle right here on the 1 hour, which is like that hammer formation. So I mean, rejection, like up here, look at up here. The 4 hour was pushing up, coming down. What the 4 hour looks like up here is a wick with a small body candlestick. Like here, actually, the wick is actually pretty long on this one. Like you have like on the 4 hour up here was like a wick. This is like the wick formation. When you go like 4 hour here, you have like that candlestick formation there. So like when you look at closes, like here, this is inverted hammer. Like more of a doji there. There you have an engulfing candle, bearish. You can always use like these types of things as cheat sheets to try to study. You gotta remember in the beginning when you're a new trader, like that's why it's good to be around someone like me who's seen them all, who can quickly dissect things. Your eyes aren't trained or developed as much in the beginning. So like you might not see as much in the beginning as you will a year from now, 6 months from now, 2 years, 3 years from now, as your eyes develop and train. A lot of people get discouraged when they start trading and they start learning. They go on the charts and they might not see as much as they can, or they look for more. They always look for more, 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 and more. Some people get discouraged in the beginning, like not being able to see things, and that's pretty normal in the beginning. Because over time, you see more and more and more of the patterns, the recognition of things. I'm probably just going to close that trade when I get off, or leave it at break even. Am I gonna take another trade? Probably not. That meeting, yeah, the meeting. Oh man, it's been, yeah, like been. I gotta text buddy. Yeah, my bad. I forgot about the meeting. Oh man, it's been a chaotic weeks. Friggin' been sleeping on my couch, passing out, like something like, frig man, like it's been rough. Can barely trade with Leo here. It's hard to trade. Like Leo's someone else here around you all the time. Like I don't know. I'm very stationary, very introverted. As well, like very introverted person, unless I'm like going out or around people I'm comfortable with or friends. Like pretty introverted, so I like stationary. Like I work best when I'm like me and my own brain, quiet. It's actually like hard having people around when you. I don't like having people around when I'm trying to trade, lock in trading. It's not the same. Like Leo's not even here today, and boom, I call like two. Like I took like 3 trades today. I lost a trade, took 2 trades. I'm already like back in the mix. It's like, holy, it's hard to trade when people are always around. So it's a very I think trading's a very stationary job. It requires being stationary, not distracted. But yo, one trade at a time, yo. One trade at a time. It's pulled back. We almost broke the 400 live on stream. Looks like this thing's pulling back now, reversing. Yeah, it's like made another shift. Like every time frame has candlestick patterns. You just have to remember, like sometimes their frames are more frequent than others. Like this is a 15-minute chart. So when you're training yourself with patterns, it's good to start from like 4 hour, 2 hour, 1 hour. Like don't start in the 5-minute looking for candlestick patterns, because there's gonna be more of them, and some of those might be just trades that are better for scalps. Like time frames also derive on like the style too. Candlestick pattern you're seeing on a time frame might be more specific to a style. Like if you're seeing something on a 5-minute versus a 1 hour. 1 hour is good, 4 hours good, 30 minutes even good. Yeah, gold's been on some chop here, yo. Gold, we might tomorrow and Friday are gonna be interesting. I know, because I know gold very well. I've been trading for over a decade, so it's sideways right now. So I know it's building up for something. Usually when it just goes sideways like this, like you could see we were sideways here in this range, and we had a strong breakout down. So honestly, gold looks like it's building up. To me, what is my opinion? I could be wrong. Overall, I think it's building up to go up. I could be wrong. But yeah, like if you look at this area, we actually we could literally consolidated in this area right here on gold right here, and then we broke down. Same consolidation, pretty much like similar in the same area. Look at that. Yeah, like I feel like gold's building up. Like it's just sideways right now to me. Like I feel like it's trying to build up for a bigger move. It's consolidating in the same spot it was consolidating the other week. Just in here, right? With that like area. Like yeah, we're just same support. So move down. If it breaks, it takes us down. If it breaks lower, like that would be like maybe a breakout trade. It's consolidating in literally the same spot though. You can like if you look to the left. So to me, like it hasn't actually done as much as gold usually does. It could go down as well, yeah. It could break out. I think because it started shifting up, the reason I'm thinking like we could potentially go up is because we started like pushing this way up, making that consolidation. To me, like, okay, it was coming down, and then it started consolidating, broke down more. Now it's looked like it's shifted up to me. Like, to me, it's looked like it's shifted up, and that it could be consolidated to break out to the upside. So I'm not really, I don't know, I'm not looking for the breakout, just looking for entries like this. If you catch entries like this, you could put them break even. Because I'm going to see where the charts are doing tonight. Probably take another trade tonight. Tomorrow morning we'll be live again at 8 a.m. Eastern time. Keep picking my lip. I bit my lip. Ouch. Oh, I logged out. It's because I haven't. Oh, I have it here on my monitor too. Yeah, I have it here on my monitor too. Yeah, like what if gold? To be honest, like what if gold is creating strong? Like there's a strong support here. There was a breakout like weeks ago, broke underneath. It could try to go for the same breakout. Yes. Yeah, gold looks pretty calm like this week. It's like to me here, yeah, this is what I was looking for. Like to me, gold looks kind of like this, even in a way. See this, like consolidation there. Gold can often make holding patterns like that on smaller charts too. Like it could make this same type of pattern just like in a stretch that's going up, like in here before going up, like a consolidation on smaller time frames, like 5 minute. See, like here again, gold can do that. Yeah, that's like if you look at this, to me, gold's kind of in one of those where it's like, yeah, it could try to break out to the upside. So for me, it's like just looking for trades at the right times, like looking for setups, looking for the right buys if the market's setting up around a certain time. Like let's say London session looks like buys more than sells. Okay, maybe I'll stick with the buys. Or if London session looks more like sells than buys, maybe just stick with the sells. That catching those trades could lead to that breakout, right? Like if London looks more like buys, I'll go for the buys. Or if New York looks more like buys, I'll go for the buys. Not really worried about catching the breakout. Just trying to catch like regular trades, regular strategy. You could be in a breakout just that. I'm not really worried about catching the breakout. Like if it breaks underneath, we'll go down. If it breaks above, we'll go up. I'm not worried about catching that. I'm just looking for more trades like the one I showed you guys today. The ones I showed you today. Leave those trades that break even, you could be in that breakout, right? I don't know, because to me, gold, I'm kind of like 50-50 on gold right now, to be honest, and like what it's doing, what the chart's showing. I'm bullish, but I could see like because the daily, we have bearish like momentum on the daily. Yeah, gold's interesting. I'm like 50-50 with like how it looks. When you're 50-50 like that, just if you're like that, you feel like that ever, just give yourself time. Like get off the charts, come back later. Don't, come to the right times, come around the right times, the right sessions. see what's going on. Try to form a bias within that time, around a window, like a narrow window of time, like London, New York, late Tokyo. But I'm gonna wrap this up. Gold's dropping a little bit. It's because I'm here, dropping a bit. I'll see everybody tomorrow, 8 a.m. Eastern time. Make sure you guys tune in tomorrow at 8 o'clock in the morning Eastern time. I'm going to be live for New York session. Probably going to go live if you're inside the inner circle tonight. If you're inside the inner circle, I'll drop a link tonight. Don't know which time, but going to be watching the charts. And if I see like anything setting up, I think I'll go live or just do a training. There might not be a setup tonight, so I might just do a training. I don't know if there'll be a setup tonight. It might be, or London. It might be in London session. If you're inside the inner circle, I'm gonna go live probably tonight when it gets dark, like when it's nighttime for me. It's still like it's right now. It's like 3:30 in the afternoon, so I'm thinking like 6 hours from now when it starts to get dark outside, like nighttime. What are you? I don't know what you're saying in the chat. I gotta grow my $100 account. I had $500, got lost of $400. Well, you gotta go slow and steady, one trade at a time. Trade small. You need the right setup too. Now that's like emotional trading now because you're trying to make back money that you lost. With $100, you need a good setup. So you have to be particular. Like with a $100 account, you have to be particular with the trades you take. You can't just throw yourself in any trade, any reaction. So with that size of account, you want to be more greedy in a sense, or picky. You want to be picky, greedy in the sense of the trades you take. Like you don't want to be greedy. I meant like picky. You want to be kind of picky and selective with the trades, reactions you take. You don't want to take as many trades as you might normally do on, say, 500, 1,000, or a couple $1,000s in a trading account. Because it's really about the setup. It's really about like having a good setup, not just any confirmation, any trade. So honestly, I would wait for like good setups that provide you good swing moves, like large moves down, like big dips, big crashes. Like when gold crashes, those are some of the easiest trades for me to catch because it usually reverses when it crashes. Most of the time that gold makes like a big drop, it does recover. Like you do see like a lot of like buyers come into the market. So it's waiting for the bigger setup, like the bigger picture setups like that, I think, that aren't going to be there every session or every day, like time apart, and waiting for like those bigger moves, because you'd want to take the account to like 140, 150. If you're on $100, I think being selective, being kind of picky, like ignoring some trades, ignoring some reactions, letting the market get more, like I call it letting the market get more extreme. Let it get to more of an extreme point. Let it go up more. Like if I'm looking for a buy, especially, like if I have a bias already, and let's say I'm looking for a buy, I always like to be extra patient and watch the candle for a bit. Be a bit cautious. Not rush into the trade right away. Because that better setup, that trade you usually want to take is after most people miss most people miss that trade, right? So for me, with $100, I would focus on the right setup that takes me patience to wait for, like more time waiting for setups, good setups that you're likely to get a reaction, like better visual of the charts, better setups on the chart, instead of trying to take like maybe a lot of trades and stuff like that. Tell you from experience, you will perform better with 5x times 100 accounts than one big $500 account. There you go. Someone talking from the chat there. Yeah, like yeah, you have one. Yeah, you have 5 $100 accounts. Okay, I see. And you're pretending the risk to, because $100, like $100, if you have the right setup, you could risk $100 on a setup, and it could play out. Obviously, you have the right setup, so I think it's about waiting for those right setups more than you usually do. Like the good trades that you're looking at, like this looks like a good trade. This looks like a confident trade. I like this trade. You're not guessing, or you're not just jumping in the market to be in the market. Like you're looking at the chart, like, okay, I like this. This is good. Getting to those moments more. Those moments take patience. Like getting to those moments where you see a good trade, where you're like, yo, this is good, where you like it. Yeah, that makes sense. Like even yes, yeah, $500. Because yeah, because now it's like, yeah, you're looking at, okay, yeah. Because if you could take 500 to 100 in that situation, this person's saying if you have 5 $100 accounts, you lose one. Yeah. Makes sense, because I see what you're saying. I think I see what this person's saying, because if you just traded on one of the accounts, okay, I see. I think I'm making sense of what that person's saying. No doubt it could be done. Like $50 to 700. We've seen people do like a lot of numbers like that. Like I don't doubt it could be done, right? No doubt it can be done. Like we've seen people flip and dip many times. Might be able to find some here in Discord of flips that are small numbers, even like that. I've seen people flipping $25 accounts, $30 accounts, $40 accounts. Someone just said in the chat, using the strategy, they flipped $70 to or $50 to $700. That's impressive. See, it's, yeah, like again, it's going to be about the setup you take too, like the trade setup too. Like this person flipped $36 to $268, right? That takes a particular trade setup. More than likely, they were probably buying a big dip on gold. Like gold probably dropped a lot, was crashing. They were probably buying the dip. It was probably a buy the dip strategy. Dude, what is this person saying in the chat? English or what? Yo, English? Like, I understand $100, but, you know, you got English here, buddy. 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 I don't know what's going on, buddy. There, man. English is. I understand $100. What's this guy saying? Yo, someone translate. Is it? Looks like. Is it Diddy oil? It can be done, but the pressure of doing it is what makes you rush the trades too. Like if you're in a situation where you're like, you know, I need to get to. Yeah, Kevin Warsh. There he is. Kevin Warsh sworn in. Kevin Warsh. There's what, balance equity. Oh, that's $376. That's not $100. I thought it was okay, but so I mean, like good increase there. Cause yeah, if you're in an emotional state where you're like, okay, I had $500, I'm at 100 now, and I need to now you feel the need to get back. Like I need to get back. That's where like emotional trading can start to exist more, I would say. Cause to get back, like to get back, grow an account regardless of what, like it's just about the execution, the trade setups you're taking. So like first of all, what I would evaluate is, you know, in a situation like that where before I even try to trade and get back, going from 500 to 100, Like, I would evaluate maybe even the trades you took, all of them, like every single trade you took, the time you took the trades, and just evaluate, like rehearse, like, or like back test, were they good trades? Could I have taken better trades? If you get in a situation where you're like that, where you feel like you're down bad, you had a bad L, oh, yo, we might break the 400. Maybe we do before I get off. I was gonna get off in a couple minutes, but like one thing when you have a bad, whether that was a bad week or a bad month or maybe a bad day or a bad phase, it's good to look at those trades and ask questions and say, okay, could I have taken better trades? Right? Could I have taken better trades? Was there better entries? Could I have been more patient? Like, that's how, because that's how you refine too, moving forward. It's not like when you get yourself into a loss, a bad week, a bad month, a bad day, whatever it may be. It's not about, I need to get the money back now. I need to make the money back. It's okay. How did I get myself in this situation? Like in the first place, like, was it too many trades? Was it over trading? Was it trading at the wrong times? Was I getting in early? Was I not patient enough? Were they bad trades? Were they good trades? Could I have been patient enough overall? Stuff like that, like asking questions to those trades. Were they trades I should have even taken, or was there better trades to take? You know, that kind of stuff. Because then you can start to refine moving forward. Learn the lesson. Yeah, Warsh, is it so Kevin Warsh or whatever? Kevin Warsh wins Senate confirmation is new. Yeah, there we go. All right, we saw that coming. I mean, yeah, that's. Well, I think we all knew that one. There we go. But that for crypto might be bad. Might be a bad situation for crypto. Warsh. So yeah, they did say it could have been someone else, but I think we all knew it was going to be him. Like I think Trump picked him specifically. Yeah, so that might be bad for crypto. I think I posted something in, it might have been an inner circle. Where was it? Here. It might be a signal that crypto goes down, to be honest. Could be a bearish signal for crypto, Bitcoin. Could be. There's been 4 signals if you look in the past. We've had these signals in the past here on Bitcoin when a new federal chairman has come in. But yeah, I'm gonna wrap it up. Long stream today. I streamed some good hours today. If you've been locked in, I streamed early this morning, went on my rant, and still showed you guys how to execute even when I was on that rant. And I came back and we broke it down here tonight. Hopefully you guys, or this afternoon, hopefully you guys learned some stuff. Took some notes. Make sure you guys tap in consistently because, again, trying to grow the account. Yo, oh, wrong one. There it is. I logged out. Wrong tab. Make sure you guys tap in because I'll be taking trades. Like I've taken trades on this account live before. I'll be still doing that. So make sure you guys are tapped in. And we're still going to be going. We got tomorrow. I'm going to be live every day until like pretty much like almost the end of the month, all right? So if you're here, you're watching me stream right now, I'm not going to be streaming on YouTube forever. I got the website coming out shortly. So the website's coming out soon. So like I'm going to be streaming there a lot more when the website launches, all right? But yeah, I'm out. I'll see you everybody next stream. Peace, peace, peace. 3-hour stream today. Hopefully you guys took notes. Hopefully you guys got value. If you did, smash the like button, subscribe, yo, show some love, smash the like button, share, like, come on, you know, that's sure, you know. Showed you guys the session earlier too. Like I talked a lot of psychology on the session earlier. I think we streamed like 6 hours today, literally 3 hours here. I think we did 3 hours earlier. Long day, but I'll be on later. Peace, peace, peace. I'll see everybody next streams. Peace, peace, peace.